Hello ladies and gentlemen, Jay Tyler here, welcome back to Jack Fund Management. S&P has passed all-time highs, Nasdaq brushed up against record highs, and AMC about 29 million shares got covered so far. That means about over $1 billion in short covering. P&L can fuel this fire. Half a billion shares trading a day exhibits some jolly volume. This action corroborates toughness getting a borrow or locate on some of these calls. Clover Health got far harder to borrow. A net positive, this meme saga has brought ever increasingly new audiences here and to markets. Generally, seeing people our age, younger, join in, we think of as a great thing. In a case of mistaken identity, ticker AMCX, AMC Networks, Walking Dead, Mad Men rallied, confused with AMC, ticker AMC Theaters. Meme trades look very fascinating, intertwined with behavioral theory. Options dispersion showed a possible 20% swing in GME post-earnings, converging into reality. George Sherman stepping down, Ryan Cohen will take a chair. Gamestop told of a loss of 45 cents per share, with a lot of fresh Amazon veterans, yet no one too transformational like someone from a Coinbase. Some investors get a bit exhausted with waiting for a path to profit and growth. They apparently have a black box strategy. Modeling $5.5 billion in revenue 2 years from now, $1.35 per share. A 20 multiple, we struggle to get to some in vogue prices. Highest retail golden geese stocks operate at about a 5% operating profit. Omitting a tripling in revenue, $300 per share resembles something a bit hard to justify. Just we will not guess or look at GIFs. When they actually communicate to investors, we can try to find a rational construct around it. Transcending a social pattern utilizing valuative models, AMC may have to pay down contractually some deferred leases. M&A may not serve much in any accretive way. In a theme having commonalities with this too, many other names have rallied. One has Fat Brands, ticker FAT, BBQ Holdings, ticker BBQ, Hire Car Inc., a fantastic one as we mentioned, ticker HYRE, Global Ship Lease, Inc., ticker GSL, all of which have structural stories. Unlike a Nakamoto, ticker FUV, which looks like a dud, another Lordstown Motors. Why does it look like a dud? Permit us to describe it to you. Nakamotos have low range, every single one could get recalled due to battery issues. They sold only 60 vehicles in Q1, half of what they promised. The CEO of Nakamoto said he would get an ATVM loan approval. That never happened, and on and on. This looks a lot like Lordstown Motors, who slashed guidance, raised expectation of costs, stating it may run on fumes, badly requiring additional capital even to execute any plan. They both have another commonality, incredible governance risk. Lordstown claimed serious pre-orders, when in actuality they meant reservations. Meanwhile, Ford, with massive production capability already established, market dominance and vast experience, already unveiled a much more cost-effective, highly compelling electric truck with serious range and so forth. These stocks have some similar thread. Lower per share price, parallels, and there. Separated by cases, Ford can actually make things. BBQ Holdings, ticker BBQ, savors this ongoing reopening. Some are fun. Hire Car Inc. has a million positives, unequivocally good business model. Fat Brands, ticker FAT, has almost 700 franchisees, growing quarterly progress via same-store sales, unit growth, 9 booming brands, and skilled management that noted they feel quite certain they can attain an annual EBITDA close to $20 million. France tried to find an American big tech giant once again. It seems like pennies to them. They supposedly remain independent. Yellen appears to act a bit in concert with Fed officials, saying she feels unfazed by current inflation. This would not have anything to do with the fact that they would like to work on this pretty aggressive infrastructure plan, which costs some money, would it? We mentioned ARNC, ticker ARNC, in our video. We will link it underneath. It has grown since then. It had two of many numbers everyone loved. ARNC beat GAAP EPS by 14 cents while effectuating $150 million more in revenue than assumed. Although now a Treasury Secretary, Yellen makes very Fed share-like comments. They float sooner or later, they can get inflation under control, back to a more normalized economy. This number comes out to R star, or in other words, 2.5% nominally. You have tons of easier money, foreigners still likely buying for US treasuries, even treasuries can get overbought, crowded for now. Some of this has gotten baked in. Consumers probably realize inflation has gone up as they have paid these prices. This spurs people to press on a gas pedal in terms of tech and growth equities. How structural could this stay? We will see. Could this lead to more wage inflation? Underneath, market construction momentum ETFs have reconstituted with much more value. Using a contrarian perspective, this often means an underscore temporary resistance, further attesting to this growth on move. FTSE Russell, which develops Russell 2, 1000, and other indices, which every summer, yearly, moderates and recreates, saw overall market cap measure up almost 90%. A lot of this came from one smaller meme stocks, which grew market cap and funnily enough may not soon fit there. Not due to revenue, a lot of this cap comes from entrenched retail buyers, yet memes do not really affect overall market activity. They remain an oddity. To some degree, this looks like faith-based trading. Gamestop and AMC seem to have constant interest. AMC has some reopening qualities, yet think of how many people would have to go to these movies to justify a $200 AMC price. Many investors could look at what comes next. Inflation attaches itself to every chat in a background for now. It can come to a forefront at any point. Implied volatility for AMC equates to basically a price at which it currently trades, telling you more or less it could either double or halve in 6 months. Confirming deals on anti-corruption, anti-ransomware, Boris Johnson and Biden met to highlight the special relationship. He will convene with Putin and Switzerland to hash out human rights, nuclear weapons, and cyber misconduct. 2/3 of small businesses say US put itself on a right track, yet they see, unlike a typical 1-2% maximum, a 12%, 14% enlargement in operational costs. Even leaders in fields have struggled. Due to underwriting parameters after this pandemic, some small businesses may have some drought of capital infusion. Now T-notes hover above and just under 1.5. Starbucks said wage inflation goes hand in hand with price inflation. If corporations can pass this easily, this means a sturdy business. Chipotle will open 100 drive-thrus by 2025, as well as 200 more restaurants this year and many new menu innovations. They will center on app, perks, and brand loyalty. First Solar will invest almost $700 million to expand manufacturing and a next-gen 3.3 gigawatt installation in Ohio. They boast this will forward lowering supply imports from China. They pioneer thin-film semiconductors, enable more U.S. assembly and output. Industrial policy could further animate these cycles of modernization in PV, photovoltaics. This infrastructure package could create shortages in steel. Jeff Bezos will go to space. This could prefigure well for space travel, space economy. Elon Musk may go to space, however, as a CEO of Tesla, among others. This board likely prohibits him to do something like that. Oil rapidly jumped above $70 per barrel. We could have gotten a CPI print of nearly 5%. We have not seen that since 2008. From 1992, during periods of high inflation, stocks tend to do better with high and receding rather than high and rising prints. Some politicians said they would not take any money from big tech, which seems a bit laughable given all that money sloshing around within these corporations. Job gains disappointed once more. Every onset data point comes off a bit mixed still. It may take a quarter or two to see a clearer picture with larger than normal confidence bands. This massive GDP growth and earnings as a response comes with some price. Consequently, higher rates and inflation come. So unless one thinks this Fed will never raise rates, a bit down this road, sitting on a back burner for now, inflation could heat back up. We will likely not get that much of a downdraft for every fearmonger out there, as that has symbolized recessionary activity, which, given what we got through, and two, now looks highly improbable. ESG promoting family values, treating employees well, sustainable practices, more contemporary keynotes for observance. Institutions have $1 trillion, many abide by this yardstick. Apple still has some lawsuit overhang. Pandemic issues in India and Southeast Asia had some effect on iPhone items there. We estimated about $5 of earnings, putting a 30 multiple already pretty fully valued. We land at 150. Banks will report climate-related risks. Telehealth can likely blast off. Why try to make an appointment, commute, wait an hour for a 2-minute meeting that could get dismissed? Wi-Fi and internet statewide may have to get brought in to more absolutely support this. Bitcoin could help serve unbanked individuals, now accepted in El Salvador, with about 70% of people not having a bank account or credit card. This could give a very minor catalyst. We still have supply constraints. Materials still have grand upside with global proliferation. Tesla Plaid Plus disappeared. They stopped this via a tweet. People will no longer have this 500 miles. Conceivably, they cannot secure or supply batteries to accomplish this, make them or pay for them. Also feasible, they could not follow through on this vow of power. Component shortages abound. They grapple with supply chain deficiencies. Lucid can do 500 miles. Tesla has faced more regulatory scrutiny in China. Investors probably look for 300,000 deliveries this year. Total crypto market cap rests at about $1.5 trillion, 30 basis points of all global wealth. 30 basis points. Bitcoin still gets dominated by almost 90% retail, while institutions still own all the money. Crypto, as it consolidates, has to get a new narrative. With crude resting at 70 plus, it disrupts an old range based on demand. OPEC, now once more a marginal price setter and producer, has more control. Worldwide demand grows more than 2 million barrels OPEC will offer. Big upside remains. West of Atlantic, US rig count has lagged. Now we have less drilling land. We all comprehend spigots do not just get reopened. Shale producers have lower risk appetite now. CapEx has gotten lowered and repurposed to more green ventures. This field has endured career cuts as well. Markets already priced in Iranian inflow. Tankers remain afloat, holding on. In anticipation, prices go higher. Facebook hit another record high. Things could propel things upward. Alphabet, ticker GOOG, looks absolutely imminent here, blaring with an exceptionally reasonable valuation. Given these conditions, it will break out to new all-time highs. More Americans view going back to an office a deal breaker. Many Apple employees quit for not getting hurt and given at-home flexibility options. Now, small perks could steal talent elsewhere. Tons of sections went down within US Web Services. Fastly runs a CDN, content delivery network, a net distribution backbone. Now people realize, maybe even more, how much importance Fastly Inc. could have. To have a recession and recovery all within 5 quarters has never happened. IMF foresees 6% global growth for this year. This kind of growth pace has not ensued since 1972. This could galvanize cyclicals in late 2021. Meme stocks show more easy money and risk appetite. Green infrastructure could erupt shortly. We look at Biden Green Tech and this Green New Deal coming from Europe. US perceptibly recouped some of this Bitcoin extracted in a hack. Something about all this comes across a bit fishy. Curiously, as they maintain, Feds got into DarkSide's wallet to access this crypto. They did not hack any systems. Some of these companies did not even have multi-factor authentication customs in place. Lamborghini had a record first quarter. They will make a hybrid electric Aventador. Inflation could likely stay a macro theme of our time. We have an office very different than Reagan-Volcker. In stark contrast, we have a Fed not leaning against inflation. What happens if inflation stays more structural? T-notes have faded downwards. VIX hit a multi-month low. United Health will curb usage of unnecessary emergency room use. Many said they put on extra weight during this pandemic. Mixed with going out, clothing outlets have seen a higher shop rate to get a resize and new going out attire. Studies sprung up showing about 25% of consumers have a new size and had a gain about 2 pounds per month from a more sedentary, lock-up lifestyle. World Bank envisages 6.8% 2021 growth for US, 8.5% for China. World growth has not tapped near 5.6% growth in over 80 years. Prices keep going up, a trend world-round, including food prices. This could affect many with corn products, food insecurity. Markets wrestle on a day-to-day basis how much amplitude this recovery has. Funnily, some lower margin, higher debt, higher operating leverage businesses, those very sensitive to economic growth, have and will persevere in outshining all others in a trend. Although many tech stocks have coiled like a spring, FANGs, Alphabet, ticker GOOG, Facebook, ticker FB, only brought in about 5% on a YTD basis. Yet big tech stock fundamentals continue to grow double digits. Having more humble returns this year, they get cheaper as revenue carries through forcibly, and they base. Lumber prices may stick with us longer than we think. Builders would add to supply, just we have a severe imbalance. It has such severity that people will likely have to wait for production. Billowing prices in raw materials led not only to price pressures on houses, holding back production, however likely more decidedly, an alteration in where builders build. Data shows by price point, home builders have shifted to fabricating more higher price type homes. So as overall housing volume maintains lows, type of house erected sets up a noticeable standout in stats, whereas costs of lumber could get more easily absorbed by a larger priced home. Surveys from University of Michigan indicated homebuyers stated they have sticker price shock. Respondents said it does not look like a good time to buy a home. This feedback, once more, stemmed largely due to enormous prices, not interest rates or mortgage rates. Moving and behavioral changes could linger. Denver, Austin have a very dynamic economy, granting an attractive proposition for relocation. Bank of England will look into whether banks pass a climate change stress test, judged on standards such as how businesses and banks could get affected by transferring to net zero. What climate risks could they hold? What could ascending temperatures reify for them? Wildfires, cyclones, tides, but everything from real estate to farmland. Marconi, a preceding governor at BOA, fully supported this, driving this green image post-Brexit. States, on the face of it, did not like such freedom. New York State will focus on pressing on crypto miners. Under a front of environmentalism, most of us grasp that almost half of crypto mining gets done renewably. Even more gets done with natural gas. This can get carried out, yet a hardcore push for optics usually overlooks reality. America, for instance, can get powered entirely renewably: solar, wind, tidal. Most studies conclude about 85% could get done by 2030. That remaining 20% could take 2 decades, directed just right. Manifestly, not all activity can get suspended till then. Gamestop reported earnings or losses. They rejected to afford shareholders guidance. Most movement, as we can tell, has not gotten tied to any fundamentals, opposed to enthusiasm. They recounted comparable sales and revenue that did not reach street calculations. AMC Entertainment overtook GMC in market capitalization. GME still consists of about 19% short interest, accounting to approximately $3 billion. They still operate at a loss of about $70 million. Matt Furlong, a new CEO, Mike Recupero, an incoming CFO, signaled a $5 million at-market offering, as usual. This started as more of an intrinsic case with Keith Gill. Ryan Cohen professed they would not give any details about strategy. At some point, we would think they will have to elaborate on these proffered turnaround intentions. Some meme stock companies could use honesty. They could use transparency to shareholders on justification. A cultural, moral question: raising money could have to do with the success of shareholders. Bonds have stayed range-bound. This virus still circulates in emerging markets: Brazil, India. Classically, one has to furnish reasons why stocks did not go up. Over every 20-year rolling timetable, stocks go higher. 94, 99, 2015, we examine these dates. Markets look ahead, sitting pat, clearly show a wait-and-see mode, so no need for any alarmism. G7 nations pledged $100 billion to developing nations for clean, green energy projects. Allies will likely talk about how to counter Russia and China. Indices keep grinding higher. Chewy affirmed respectable earnings, beating on sales. Customer additions in line. More spend per transaction. Just having tons of pandemic procured pets, stock percentage did not like these out of stock details. Former longtime Cisco CEO voiced the US may have 65 to 100,000 net breaches this year. This has economic implications. CSOs will commence to spend to fix it, just they have to get ratings of each unguarded spot so they can spend cost effectively. Many people still do care about underlying business models. Apple per share price trades at roughly $150, Amazon at about $3,000. They both have analogous value. Long-term, an average bull market lasts 51 months, climbs 150%. 14 months in, we have scaled about 90% off troughs. Some fever could spill over in 2022. Crypto has kind of gone nowhere for several months, taking a big breather at an inflection point. On an adoption statistics, only about 2% of world population has interacted with crypto. United Airlines will order at least 100 planes from Boeing to concentrate on fuel efficiency and fleet upgrades. Since 2008, prices have not increased this much on a 12-month stretch. Core CPI leapt up 3.8% year over year, a bigger figure than anything since '93. Restaurants, retail will likely not roll back these prices as they have to keep up with margins. Car rentals notched up 16.2% month over month. Avis Budget Group, ticker CAR, one we pointed out repetitively, won. Airfares up 10.2%, sporting events tickets upturned 10%. Powell may have, per usual, no problem explaining this away. Fed officials walked away from an Evans rule, a reaction function of framework, where if Y hits X number, it triggers some tightening. BlackBerry got left out a bit as well. This meme undertaking got a bit more virulent and spread. Lawmakers reached a bipartisan agreement, passing 68 to 32 for advanced R&D devised to spur more innovation and strengthen/expedite competition with China. Biden will keep trying to impel on infrastructure cooperatively, as he would like to get some things done as a legacy. Most investors now have hedging against inflation. Fed speakers came out in force, making public they feel they have it in command. Yet next year, he may start talking of tapering. Ironically, 10 years have still sold, making treasuries go sideways. Chipotle will raise prices. Pizza establishments have set superb EPS as of late. Kindled by a priority on digital, Domino's Pizza, ticker DPZ, has proven brilliantly resilient. CEOs now basically in every sector confer that wage rates go up. We all have consciousness that those costs have to go somewhere, and consumers will feel a brunt of it. For infrastructure, US Congress crossed the delta somewhat. Biden sits at 1.7 trillion. A problem-solving caucus settled at 1.3. Republicans would like to use a mixed source of funding. Democrats insist on only using a tax increase. Private sponsorship still stands. We have no idea why either party has not brought up private sector help. I mean, many do that. When one buys shares in a charging station architect, for instance, OT, similar to IT, operational technology, cybersecurity. Swimsuits, shorts have flown off shelves, beach towels, and home furnishings too. Job openings flew to 9.3 million. Many firms may actually think of a different mix, perhaps more technology, less workers. This prospectively just adds to another fact integrated into these inflation chronicles. Bezos will, as we hinted, go to space on Blue Origin. Brother tagging along, New Shepard takes them, and a buyer for liftoff on 720. It looks like some states, G7, even in futility, would have a global minimum corp tax instead of providing a better value prop. Getting everyone to agree globally likely cannot materialize. Kevin O'Leary keeps talking a lot about Bitcoin, although ETFs he pushes have really underperformed. Maybe some housing could use federal support to empower people to flow to more burgeoning state economies. In smaller locations, one could have to drive 90 minutes to a hospital. Smaller hospitals could use more residencies. Virtual platforms have and could keep mushrooming. Endava, ticker DAVA, one such business we look at, has healthcare, logistics, and retail verticals. Overlooking Endava's financials, they grow revenue at a breathtaking rate of 23.2% CAGR, compound annual growth rate, for a trailing 5-year time slot. Many redresses rest within healthcare and biotech. Many deferred colonoscopy, other so-called elective procedures, accounting for health habits that form remote monitoring could grow. Real estate, hard assets, a stout remedy in inflation. Another wave could come. Regional management, ticker RM, performs as a branch lender with 223 storefronts in 8 states, possessing loans ranging from $300 to $30,000 US, with maturities going out as far as 72 months. They accommodate almost 3,000 independent auto dealers and approximately 1,000 franchised auto dealers to finance purchases by their showroom customers. Apparel prices blast off. Unemployment insurance starts running out next week. More hawkish Fed members may get louder and louder voices going forward. US has tripled asset wealth over bygone 2 decades. Portfolio composition trends, money flows, have poured also more into real estate and into farmland to invest in anti-price and food inflation. Century Communities Inc., ticker CCS, not only one of, if not a best home builder in this industry, it touches every hotspot. It purveys homes, they even have entitlement in underlying land, and it provides mortgage, title, and insurance to buyers. A beast of a real estate play, they develop intensely and have brokers. BIS, Bank of International Settlements, or Central Bank of Central Banks, weighted crypto. As institutions start to adopt them, they assess some risks. Lagarde averred Eurozone looks healthy. This problem-solving assembly works on real, tangible infrastructure. Concrete U.S. economy undergirding, grid retooling, resiliency in a smart, long-term way. Homeland Security tries to ensure individuals that they will fortify web systems, thrust better defensive posture. Margins have touched 10-year upper bounds. Going forward, wider moats may mean a lot. Thank you all once more for stopping by. We appreciate you all. Join us, join Jack next time.